Hey everyone, this is Ranga Dad. Not financial advice, just the way I'm looking at the market. Um, yeah, it looks like Bitcoin had some resistance, eh? I'll have a look at those levels today. But to start with, I'm just going to go through dark pool activity. Again, it's before the close. These guys like to trade around the close or just after the close, but XLF has had a big day by the look of it. And so XLF. So a couple of big trades at the high here, and financial sector is the one you got to worry about. If it starts really dropping hard, then chances are that is the start of the recession or start of something bigger on the markets anyway. Now we still, yeah, there was a couple of big ones here, but over the last month, still not seeing major signs of it actually rolling over. Not to say it looks strong, but at this stage, this could still be an accumulation zone, which seems nuts given what the economy looks like, but we've got to kind of keep that in the back of our mind that it may not be done yet. The 3-year, 10 years actually inverted again. Typically, that does lead to a recession. There's 2 times where it hasn't, and that was, I think, 87 and I can't remember. It was 80s and 90s, I think. But when it did that, it did it again like a year or so later, and that was the next one was a big one. So actually, I think it was BAF. Can't look it up. The IBIT had a pretty big trade at the open. Only 92 largest, but you know, this is going to be a very big thing to have to get through here. A lot of activity, large clusters in that area, and it stopped short of them. So there's some bears stepping in defending that level at the moment, which isn't great. That's not a good sign for Bitcoin. Whether there's enough of them there to stop it coming through this, we'll have to wait and see. But that is a fairly large level to have to get through. Coinbase, no real action either way on this one, which is kind of strange. Be interested to see what happens around the close and then what sort of movement we get on Bitcoin after that through the Asian session. But no real read on that. To me, it's suggesting that the big guys still aren't interested at this level, unless they've been accumulating here, which I don't think so. I think they've distributed previously and they're still waiting to buy back in. Like the fact we had some of the biggest ones up here, still not seeing a lot come in. Makes me a little concerned for Bitcoin, but I am also a little surprised that we only got a little blip at the moment. So I think this could be another shakeout, bit of a liquidity run before we move a little higher, but there's a couple of key levels that we've got to be aware of on the charts. This year's going to be bouncy, going to be a tricky one. Same with Marathon Digital. It's hasn't really got a big trade at the top here, so you'd think looking at this that it's expecting further downside. XLP, you know, it's still heading up. No massive trades near the high, so I think defensives are still going to be the play. like to see one that actually registers in the top 100 before we call it as being done to the upside. Again, nothing huge on XLY either, though. So market's just chopping around. Yeah, we had some big trades up here. Not getting anything yet. I don't think it's done yet. Same thing with XLK. So technologies looks like it might struggle a little bit. Was a decent trade here, but it's been met with pretty well another sell day straight away. XLV. Yeah, so healthcare is one of the stronger looking ones. It has sort of broken that range at the moment. Maybe a little retest of it, but again, another defensive sector that looks okay. Utilities. Look how it's going. Again, another defensive sector, grinding up and to the right. Nothing major yet to suggest that it's done either. XLE had a big day though. Big drop on XLE, so energy sector not looking too crash hot. It did have some decent trades at the top here, so that's not ideal. Could suggest a weakening economy, support a weakening economy argument. Interesting level here on metals and mining. Like metals and mining is down pretty hard. It hasn't really gone up with the rest of the market last year. And it's at a pretty heavily defended level. So this one is one to look out for. It could drop further. Like if the economy shits the bed, this could be a massive whack-off distribution, which would be pretty nasty. But at the same time, if governments throw money at the economy, chances are it's going to go into buildings and roads and stuff like that, into basically construction and renewal projects, which should bolster the mining and metals industry. So I think it's still one to look out for. It is defending this level. I'd like to see a big trade come through though, because there is a lot of distribution up here by the look of that chart. All right. Sentiment hasn't updated. I won't touch on that. But yeah, interestingly, we came down into these couple of massive trades that were in here. We've now got some massive ones up here. There's some guys going big, doing some really big shorts and longs on leverage. And whether they've held their positions back to zero or not, I don't know. But so far, in the space of sort of 4 or 5 days, there was some massive ones up in here. They got swept. There was some massive ones down here that got put in just as we pumped. They've been swept. Still a little bit more to go possibly, but this is sort of what we've noticed before we actually went up to the current high as well. So this, something very similar happened at the lows of that, or at the end of that 6-month period where we were basically going sideways and down. So that is something to keep in mind. Leaving this here, I don't see as super likely, but there is a hell of a lot of liquidity below here as well. So it's going to be a bit of a coin flip. The other thing I don't like is Binance peaked at 95K exactly. That doesn't stay that way for very long. not typically. That would be a very rare thing to do exact numbers. Just quickly. The other thing too is we only really got a single overbought sort of signal. So we could actually spike back up again. And this level is going to be a pretty interesting one for us. So the bid-ask delta has been an interesting one. It hasn't really, price action's kind of gone against it, which again stinks of manipulation and just the market maker just taking everyone's money. Bybit trying to recover from their big loss maybe. But you know, it's CBD's dropped to new lows again on futures. So they're wiping a lot of people out. People are getting sucked in both directions. People must be going mega short at the moment. And that concerns me, especially when spot is actually holding its levels. That really interests me because spot is actually printing a green CBD candle after a previous one where both the candles are actually red. Now, this isn't necessarily going to mean a reversal, like a push back to the upside, but it is a pretty good level for it, and they're the sort of things that can suggest the big guys are actually starting to pile in. And you can see reversals after that. So there is a fair bit of green on the bid-ask delta, nothing compared to what was in here, and we actually dropped further without much actual red. But yeah, it's dicey out there. There's a lot of manipulation. There's a lot of liquidity hunting. And looking at this chart here, you can see they're just sweeping it to the downside and then smash through. There was a lot of liquidity up here on the longer time frames. Let's get back out. So yeah, they just swallowed all that. Surprised they didn't go a little bit further. There was some more up here. There was actually a pretty decent level up there too. Hang on. So yeah, there's a fair bit more up above. But the thing that concerns me now is this down here. Like if we take this, that's actually potentially the start of the bear market. And like there is a fair bit above, so could just be sucking more in there, getting ready to go higher. We could come down into this level here, into the 82s. It looks like it wants something. Like it's not gaining that much sweeping these levels at the moment. You'd expect it to try and actually break into these levels. But this is concerning. So if we go over to the charts, this is why it's concerning. Because basically we hit pretty freaking crazy level on total crypto market cap versus stable coins divided by stable coins. That was a pretty good trend line through the tops there. Rejected that. This one here was a longer term trend line as well, sort of taking out a lot of the bottoms through this cycle. So being below that to me signifies that this cycle is done for the time being. We would have to get back above this line for me to actually think that there was going to be a new attempt at an all-time high or a new run up at least. And it's a pretty solid rejection. And when we look at the actual Bitcoin chart, that was the value area low as well. So It's rejected the value area low. It's recovered a lot of this vector candles up in here. There isn't a huge amount of liquidity left to grab up here compared to what's down below here. So that's, this sort of level, you're talking into the 75, 76, which we've talked about that level for a while now. It may take a couple of days to get down there, but the issue is if we're getting down there, what happens then? Like, to me, that's not going to look like a spot where we're going to go to a new all-time high. I could be wrong, but this looks more like the end of a cycle than it does the start of a new pump. So yeah, rejected that. Couldn't close above the longer term trend line as well, so I'd call that a rejection of that as well. And on the 1 hour, what pisses me off is that fucking short. Didn't have enough protection on it, would have played out very nicely. Anyway, that's why I only gamble with small amounts. So we're breaking below key moving averages again. 13 and the 9 have crossed again. Yeah, this is downside momentum, pretty serious downside momentum. This stochastic momentum can stay down for quite a while. There is a value area high here at 69.2 from a longer period. That was basically since the start of the last 6 month consolidation. Bull flag. If we're getting down to those levels, it is the start of the bear market. The caveat on that is it's going to trade more in confluence with general stock market. So the general stock market can bounce and just short squeeze everyone. You can do that pretty hard at the end of a cycle, so you've got to be a little bit careful. But at this stage here, not to be too doom and gloom, but needs to find some support around the middle of this channel, which has been a pretty good level for it to bounce off. Otherwise, it looks like Bitcoin is done for the time being. It'll just be dead cat bounces. So the issue for me is these are both really quick moves, and what we tend to see in quick moves like this, quick up, quick down, you actually quite often get continuation of the upside. So back up into this value area high, into the value area low, or even the point of control. Value area high does have some vector candles up around that top there. And if we're doing that, then you got to be thinking, well, okay, this could actually be a more extended bounce. I guess key levels are looking for a bounce around the middle of this channel here. I'd probably prefer to see it on the 1 hour. If we do get a 1 hour turnaround there, then it should come at least back up into sort of the 93s, high 92s. If we don't, then it's back down to these lows, and I would actually expect it to sweep those lows. And it could look pretty nasty at that point. But for the time being, this is just recovering these vector candles. It's got a lot of big shorts to liquidate up here if it wants it. 95 100-ish to 95 300 was a pretty good liquidity level as well. But again, you probably see it spike up into the 96 400 into the point of control. That's been a pretty good level lately as well. So the key thing though is we've got to find support before we hit and break through this level again. Now, what I noticed the other day was during previous cycles. So this was the top on the first run up in the 2021 bull run. And when we broke through this trend line here, we sort of broke through and bounced, excuse me, and had continuation up, another little bounce. And then we broke down, and we actually broke down with a big wick through, and we had another daily close below that trend line, retested it, and then just fell away. It did come back up and retest it again a couple of weeks later. So that would be sort of your first dead cat bounce. And then it went into that mini bear market that we had. And then it had the run up again. And obviously total versus stables didn't get anywhere near as high. But the interesting one was this was the FOMO, too much money in the system, retail just throwing everything at it. And the peak of that cycle, which was the high on Bitcoin, the 69K or whatever it was, basically we came down, tested it, 2 days up, 2 days down, another little bounce, another test, another bounce, and then we just shot straight through. So there's two ways this could play out. So far in this cycle, this is that, not that one. This here is that same sort of key trend line going back all the way to the lows of the bull market. Sorry, the bear market. Basically, that's your end of December 22. And we've tested it. 2 days up is our first day down. If we get another day down, and we could get another wick through that level just to pick up the liquidity that's there. What you want to see to be like properly bullish, thinking this market's going to go higher, I think you need to be closing above this trend line here, to be honest. As long as we're below there, you got to be 1 foot out the door looking for this to break down. And I think if we get another daily close, like if we get a daily close below this, you're only going to be looking for retests of it and then move away. But the way that could look, and we could do what I've got here. The other alternative I had yesterday was we actually break through here and sort of work our way up into that area. What I'm concerned about, this turns out to be a bearish engulfing candle on this chart. That's not going to be good either. Is that we sort of break down in here, come up, test that level, potentially up into here on wicks and stuff at least, and then we just fall away. That will look pretty nasty, and I'd expect it to basically be bouncing in this sort of channel here through the bear market. The interesting thing is just how low we're getting now on this ratio. I mean, we can keep going forever down to 0, but just the volume of, like, the market cap of stable coins versus total crypto is getting higher and higher throughout the years. So just interesting observation. So it's still undecided. Need to see a decent bounce from these levels. This has to be a liquidity sweep ready for another bull market, but at this stage, not seeing it that way. The only thing that we do have in our favor is stochastic momentum is quite low. Volatility is high though. So what we could see is this flip and we actually come down a little bit further. And then when it turns back to the upside, it's a volatility drops and we only get a grind up to the upside and we're just testing these sort of levels again. That's kind of, that could be what plays out here. But yeah, it's probably, it's 50-50 for me whether this is a good buy level. Somewhere in here is a good buy level, even if we sweep that 75. I do still expect that it is a bounce if that happens, but this one here may actually be a decent buy as well. But you got to be looking short term. Take profit levels are sort of have to be in along this this trend line here and this trend line here. They've been pretty strong over the last few months. All right, have a quick look at ETH while I'm here. Oh, that is a nasty looking candle on ETH. The importance of trend lines at the moment is pretty high. Obviously, the vector candle wick as well has been a big one, but Jesus, ETH looks nasty. I know they announced that the change of leadership or something in the foundation the other day. We're breaking out of a fairly high volume area too. Wow, yeah, ETH. Anyone say they wanted to buy ETH at 1,500? Because you may get a chance sooner rather than later. I mean, this is beaten down pretty hard. I would expect this to bounce relatively soon. But that could be a couple of days away. If the market turns around from here, it's going to be a massive turnaround. And what I said in Discord the other day, CME is nearly closed. That'll be an interesting level. We could get a bounce off that just to piss everyone off. But the fact that we close this one here and it's looking so bearish, that's interesting. Interesting that momentum's still the upside on CME, even with this bearish candle. Not often you see 7 days of red in a row for Bitcoin, so that's kind of a tick for bullishness. But geez, that hard pressed buy on this, and that's what Wall Street loves to do. They make it look really hard to buy. Shit, where was I going with that? Oh, move on. BTC longs, they're still piling in with that. That's good. I'm just going to go up. Have a look at that on here. So we are at really quite high levels. We've been higher, but yeah, people are buying the dip pretty hard. Oh. Just flushing. Vector candles all the way down to 85 on the shorter time frames, and then you've got these ones in here which were the target of my short, even though my average entry was at like 86 or something. Leaving a lot of vectors behind. It's looking like this is just a flush, suck some more shorts in, and then potentially bounce. It's just whether or not we can get back above these levels. It's going to be a wild ride. Wild ride. Pretty overextended on linear regression too on the shorter time frames. Even the hourlies are probably going to be pretty major. Come on, calculate. Oh, just coming back into the middle of the hourly. If this is aggressive, this could keep going, but it's a hard one to call at this level. That is a good level for a bounce. a little bit below where we're at. But for the time being, there's a bit of divergence too. There's some volume coming through, some buying volume coming through at this level. I only just started the candle though, so don't worry too much about that. All right, let's go back to the cues. So this is the thing that concerns me a little bit. We can chop sideways like this for a couple of days on major markets. We've had something similar before. Big run down, little pump, flash, looks like it's going further, pumps again, flash, and then it actually drops. That is something we could see here very easily. Don't know whether there's news or anything. Exchange traded funds, retail earnings. Marsh. Well, that's a pretty nasty rejection by the look of that. PMIs come in a little weak, not less than 50, but weaker than expected. So that's probably an excuse for the market to do what it's doing. Unless there's some other news stuff that's out that I don't know about. Nasdaq $4 weakened as Trump. Oh yeah, so the Trump tariff stuff. I guess that's probably causing a bit of concern in the market. Again, like they're supposed to come into effect tonight my time. That's a big drop. We thought it was a big drop then. Hey, shush. Guys. That's a pretty well similar drop to what happened on Friday or Thursday the other day. The fact we rejected this trend line, that's probably the biggest thing here. So a move down into 200 EMA or SMA. So the SMA is a little bit lower than that. That's a pretty good level for a drop. It could be the start of the bear market as well. Like you're going to be pushing shit uphill to get back up to and through this trend line and then through that trend line. Like people are going to get excited when it does pump back up, but people are flipping bearish really quickly, and that concerns me too. Like the market will shake people out, and when everyone just flips bearish in the blink of an eye, which happened on the drop last week, chances are it's not quite done yet. So on the equal weight, we still haven't broken down from that trend line, and that gives me some hope. There is a bigger trend line here though as well, which we may hit if the Qs actually come down to the EMA there. So I think this is still possible. I was a little surprised that we didn't come straight down to it. But this is also a retest of the 50 EMA on the daily, which can lead to significant downside. Yeah, not looking great. It actually looks like there should be another couple of days or another day of downside at least. The way this is flushing, it's actually going to freak a lot of people out. So finding bottom somewhere around here would be would sort of be max pain for a lot of people. But there are some targets up here, some vector candles back up around 22. And everyone will be breathing a sigh of relief. It's not the end of the world. Everyone goes bullish again. We potentially get a new all-time high. and then the market crashes into summer in the US. Just some scenarios to keep in mind. At the moment, this is just a vector candle recovery on the SPY, but rejection of some pretty decent moving averages and trend lines. So looks like another day or two of down, at least. IWM's the one that sort of concerns me. There's not a lot to hold it up. I mean, where it's hit there is some resistance through there. But realistically, breaking down from this sort of structure over a long period, breaking down out of this channel, I do kind of expect it to come into this 190 level. And that will look pretty nasty for markets. Thing is, I haven't heard any news that's really suggesting the system's screwed yet. Kind of news you get, like Lehman Brothers crashing or home loan defaults and stuff like that going through the roof. We've got a whole heap of signals that are suggesting that the economy's fucked, but we haven't really seen it play out yet. So another down day too on this into this level would be a good one. XLY, XLP. I think that's almost a given. So I think another day down on the markets, or at least some stage this week, I would expect us to test this level. This is, well, that's probably the most concerning thing. XLP versus SPY breaking this trend line. Typically, when we're breaking trend lines like that, that's the end of a pretty decent pump. So as you can see, this pump here, it broke basically, or it topped out just as this one broke back through a trend line and reconfirmed it. I'll just zoom in on that for you. So the trend line, we had a blow off top on it. So the trend line was something like that. And we broke it. And look, there was little smaller ones as well, which were the first sort of signs. So kind of tried to break out of this one. It did, found resistance at this trend line, broke above, retested, and then basically that was the start of the 22 bear market. Looks like something similar is happening here. So we broke this trend line. We've come down a little bit now, eventually. And looks like it's trying to break it again. So a couple of days up, or just a move that retests this trend line and bounces away. That's confirmation we're in a bear market. But even just that break after so long in this sort of climate with what we're seeing with distribution into retail, it looks like it's done. Like I'm calling it that we are very close to the start of a bear market. Equal weight XLY, XLP, it looks like it's going to keep moving down as well, probably into this trend line. Again, expecting some bounces, which would be basically bounce on those, would see this retest this level. So you've got to be, everything's sort of aligning at the moment. The one caveat is that we haven't actually tested the big trend line on the equal weight XLP versus SPY. So that, to me, suggests we could still get a bit of chop, fair bit of movement. But at the same time, it's going to be choppy. Both of these will be choppy. So this might come up, retest it again, come back down into that sort of level. go up, come down, go up. It's going to be choppy on the markets this year. We know that. Typically is in the third year of a bull run, and especially at the start of a bear market. So that is what I'm kind of expecting at the moment. Consumer staples equal weight still sort of hasn't broken back below this. So consumer staples is probably the one that's really going to hold up okay. It is a defensive sector. Regional banks is coming down a little bit. This is the one that I've been surprised it's holding up. Little blow off top, all-time high on financials as well. That's not a great sign. ITB, whoops. ITB is testing this resistance level, support level, sorry. That's not looking good. Again, break below this, retest of it, and a move down. That's done. But then I think we'll start hearing some bad news across the markets if that happens. Home builders is still not reaching those levels yet, but it's not great. Semis breaking out of this channel, that's not a good sign either. 200 on semis is the target. So a couple of days down on that as well. Into that level, expect a bounce, retest of this potentially. And then that would all pretty well align with the start of the bear market. DJI gold still, well, it's kind of breaking back below that key break level. That's not a good sign. DJT failed to get back above that little trend line there. That's not a good sign. So DJT and DJI both going down pretty hard. Yeah. I'd expect VIX to have a spike reasonably soon. Next day or so. Skew, we did have a bounce on Friday. I don't think that's going to be in that direction at the end of today, but interesting that skew is bounced, well, it bounced and we're seeing a sell-off, pretty major sell-off. That's not a good sign. But again, if we're making lower highs on skew and lower lows, then that's a pretty good sign. We're going to go into a bit of a bear market, probably recession. And recession will probably be called in about 6 months probably. They'll put it off as long as they can. The VIX one day, it's going up, so market's coming down. That makes sense. Again, it did have a little bounce on Friday. With the bounce in the market, obviously, but yeah. We'll see where it gets support. So another couple of days down here into this trend line, potentially. If we flush a little bit more on markets, then it's potentially got another couple of days to go. You want to see a turnaround in this, though, for big buy in the market, I think. Turnaround in momentum would be ideal. Just go to advanced decline line. Whoops, that's not it. I'll find it eventually. Where the frick is it? Why can't I? Sorry. There we go. So advanced decline line closing back below the moving averages. So choppy, hard to predict this. That's probably going to stay under there for a little bit. And if it does, if we get crosses of these moving averages, typically there's more downside to come. So that's not good at all. Interesting if we get a little bounce of that. But yeah, not expecting that really. A lot of indicators pointing towards downside. Okay, TLT is still moving up. So again, move to defensives. Tax, fuck it. This thing's going to come down hard if the US market shits out, I would think. Unless the money's moving out of the US market into some of these other ones. So China and Hong Kong, Germany, UK. Wow, that's a interesting one. I called this as a potential resistance. I didn't think it'd spike and then close below with a freaking shooting star like that. That's a fairly good topping signal on the UK 100. Japanese markets pulling back still. So it's still looking pretty negative. Potentially just vector candle recovery. We could see a little bounce on Japanese market. But at the moment, hard to go against that trend. That is, trend is to the downside. High yield junk finally pulling back into an interesting level. So this may provide a bit of support, but if this keeps dropping through, then markets are probably going to go down for a bigger correction overall. Like LQDIF still coming down, so still negative on the markets because of that, or it's another sign to be negative on the markets. So the three months and the 10-year has inverted again. So this was inverted for ages. The second inversion, we kind of had, this is basically the third inversion. Typically, recession happens pretty soon after that. Yields still coming down. Expect some support around the 3.9 unless some news comes out that the Fed has to react and drop rates and the economy's crap to bed. Then you'll see this drop pretty hard, pretty quick. Don't expect a massive bounce on the markets because it drops though. Unless they announce some big spending measures. Copper, flat, doji, no real move there. That's an interesting level for gold. It's not through these yet. If it actually closes above these moving averages, I may actually grab a bit because, I mean, that is a decent level for a bounce. I would have preferred it to come back in here, but we'll wait and see. Gold can still sell off when the market sells off, so this could just be a vector candle recovery for the time being. If it closes above that, though, that's fairly bullish. Silver, a little bit of a bounce on silver off the 50-day, 50-day moving average. And momentum's shifting, so could have a decent run on silver as well. Might have a nibble on them. Oil, value area low, finally actually hit it. Oil does look like it wants to come down a little bit more though. Break this level and then that'll look pretty nasty on oil. Hasn't done that in a while. May have got my buy into that. Not sure yet. Dixie, so a bit of a reversal there on Dixie. Failure of that, reclaiming that resistance level. So I actually expect Dixie to break below that now. That's probably the better buy level for Dixie. So the markets are likely to still sort of grind down a little bit over the next week. As even though the yields will probably come down and the dollar will weaken. Then we'll probably get a little bounce. How long that lasts for, we'll wait and see. The global liquidity is starting to trend down again too. That's not ideal. That's a fairly negative sign. Percentage of stocks above the 50 is probably going to come down again, I would say. What we kind of want to see it hitting at least the 25 level on percentage of stocks above 50. I think that would be a better buy level. But over the next year or two, I'd expect it to get down into the 10 at some stage. Mag 7, ooh, it's not looking great. I think we had a measured move down into the 1960 level. Again, another couple of days would make sense, but whether it breaks back above this trend line will be interesting, because if it doesn't, then that's going to look pretty nasty too. Most of the big guys retested the 200. Nvidia failed the retest of the 200. I fully expect Nvidia to hit 105. If not, even 90. 90 is a vector candle recovery and a point of control from, not really from the start of this move, but from a pretty decent level that I didn't think I'd have to go further back from. Let's see what it is there. Still a big volume area. And we're coming through a pretty low volume area, so a little bounce here could happen. There's some volume there, but I'd kind of expect that bounce to fail as well. Potentially back up into the 200 daily and then move further down. Google still hasn't come down far enough. Microsoft, interesting if Microsoft just bounces around in here for a little bit, maybe sweep the low, potentially back into 375, but that's not a bad level for at least a buy the dip. I don't think I'd want to be holding much for very long, but 379 kind of aligns with a few things. But yeah, bounces I still expect to not last very long, and we actually come down reasonably hard. ARK-K looks like it wants to at least test the bottom of this channel. We are leaving a lot of vectors up there too, so just be mindful of that. Apple retesting that pretty major support level. Triple M, a little bit of a blow off top maybe. Amazon, I'd be surprised if Amazon doesn't make its way down to this trend line over the next week or so. Meta breaking down below its trend line that it has respected quite a bit. It's going to find some support. Like Meta might bounce around in this area for a bit before dropping off. But we are coming out of earnings season too, and earnings was reasonable. So I've got that in the back of my mind too, that kind of needs to have something major going on for things to really drop a lot harder. Broadcom, interesting level for Broadcom. Tapping into the 200 and then potentially a bounce would be on the cards. Again, there are some massive moves. Like some of these things are down really hard, and you're potentially going to see bounces on some of them that are pretty significant as money shifts around the markets. Wall Street's going to be moving shit around. But Jesus, at the moment, like TSMC, that looks nasty. Big volume. That looks like it wants to be around 140. There's going to be bounces, but holy crap, that's not looking great. Stellantis looks like it's going to break down out of this range. Ford still looking nasty too. ASX actually looks like it could go either way here. We tapped the 200 already on the ASX. Bounce up into 84.70 at some stage is likely, I think, but yeah, it's meeting minutes out today could actually see things bounce. Don't know how they're expecting GDP to grow though. That seems weird. All right, so that's pretty much where it's at. I think yeah, things could look a little bit nasty for Bitcoin, but kind of I'm leaning towards sort of another retest of this and another little bounce. Whether if the markets go on a good bounce, Bitcoin will probably follow. In which case, we could actually break above this trend line here. But I'm really interested to see what happens around this level again. If we close and below that, then it's just a matter of time before we go bear. And Bitcoin could lead the way for the general markets as well. That's a interesting one. XRP, daily vectors, hasn't fallen all the way back. So pump and dump like this. I know there's an example on XRP, but the thing that gives me a little bit of hope for the bulls, one, we've just tagged that middle of this channel, which is a pretty good level. We covered a lot of the vectors in that candle. When Bitcoin does this at the lows, can actually lead to pretty, like it can lead to further upside. Just trying to find an example. I mean, that's not quite the example I was looking for. So something like this is potentially what we've got going on. So you get a pump, you get a dump, you don't actually go back below this previous low, and then you're going to run to the upside. That could be what we're looking at. It could be this too. But see, this is happening at the highs. Got to be looking for ones that are happening at the lows. I think people were hoping for that. Yeah, they're going to be a bit disappointed. Could just be getting this too. Could get a bit of sideways. Just choppiness. I mean, that's at the low too. Could be getting something like this. Up, down, then basically just choppiness for a week or so and then a dump. I think that was one of the major dumps in the bear market. What else? Is there another example? Yeah, something similar to this, potentially. Yeah, all right. They're the things to look out for, but I'm not expecting like a massive run up unless there's some sort of news that just bolsters the whole stock market. At the moment, though, there's a lot of signs out there that we are on the verge of putting in the high for the next couple of years, I'd say. All right,